Hello and welcome. You're watching Your Trades. I'm Kavita Thapliyal and with me is Mansi Dave. And Mansi, today again we saw the benchmark indices because of lower sentiment among investors amid the India-US trade deal. We've seen a subdued session in the markets today where a lot of sectoral action and broader indices also in the end gave up the gains. But then we were somehow trying to hold 25,500, but the closing has gone below that.
Absolutely. Good afternoon, Kavita. And literally another session of lackluster performance, consolidation, and of course, talking levels 25,476. So we did try to touch 25,500, but eventually did lose the shine over there, at least some shine at least, and did close 50 points down from there at around below 25,500 particularly. Talking about Bank Nifty, of course, banks and financials were trying to support the markets, but eventually did land in a volatile move, 57,217 to be precise. Talking about the NSE indices tracker, if you see, it was just the auto sector as well as the FMCG pack which was trying to handle some gains in the market. Automobile sector, of course, was doing the rounds, and FMCG also. We did see quarterly updates coming in from banks and financials, real estate, FMCG pockets, and steel majors also did come up with their business updates. But all in all, a lot of global uncertainties which are weighing in, because of which the markets are non-directional and market participants are clearly cautious. Talking about the major contributors in this volatile market, we did see Reliance not performing, the big boy losing the gains, and of course there were news flows because of which we did see the signs of downtrends in Reliance. On the flip side, HDFC Bank, HUL, ITC, M&M and Ultratech Cement were a few counters which were doing good, major contributors, and ICICI Bank along with Reliance, HCL Technologies, L&T and Bharti Airtel were not performing in the trade. Talking about the sectoral approach of the market, yes, of course it was FMCG which was helping the market today. Sector of the day is FMCG for the day. Automobile, pharma, financial services to some extent were helping the markets, but on the flip side, we did see energy, PSU Bank, IT, metal and realty not showing any signs of positivity, and surprisingly, energy sector, which was showing gains since last 3 to 4 sessions, did frizzle out in the gains during the session. So it was absolutely a range-bound session, and we did close in that same range. But let's try to decode the markets and understand and strategize the market for tomorrow, both index-wise as well as stocks and sector-specific approach. For the same, we have Amardev Singh ji, Vice President, Angel One. Amardev ji, good afternoon. Thank you so much for giving your time to ET now. First things first, talk about the levels, index-wise, both the benchmarks as well as the broader markets were not really performing in the session today.
Yeah, very good evening, and thank you for having me on the show. What we are currently seeing is definitely there's some sort of consolidation happening on the benchmark indices, be it Nifty or Bank Nifty. But overall, the trend remains positive, and I would say that we should look at it from this perspective that markets have risen significantly from the lows that we witnessed in April, and they are holding up quite firm, and also there are not much of negative triggers in the market. So that's definitely positive. Now the key triggers would be the quarterly results, how they pan out. We'll start seeing them coming in, and that would have an impact. Otherwise, there's not much of negative news flows. So I would say that we should be definitely, and we've been positive and bullish on the markets, and we've been seeing that be on the long side. Currently, if I look at from a technical perspective on the charts, so from a short-term perspective, yes, there is some decline in momentum. There's some sort of consolidation happening, but overall the trend remains positive, and definitely the verdict is in favor of the bulls. Having said that, if I look at the levels, what are the levels to watch out for the index? That is, first I'll talk about Nifty. So somewhere around 25,200, 300, that's acting as a very strong support zone, and that should act as a very strong support zone. So any pullback towards those levels is definitely a buying opportunity. On the upside, yes, we'll see resistance on the 25,600, 650 zone. That's a zone of resistance, but it's in favor of the bulls. Now coming to the other benchmark index, if I look at Bank Nifty. So Bank Nifty has been quite strong. It has hit record highs and is now somewhat consolidating, but I would say definitely it's very strong on the intermediate term trend, long term trend. So any pullback is a buying opportunity. If I look at where the support levels are for Bank Nifty, so that's somewhere around 56,000 600, 800 zone from a short-term perspective, and on the upside, it would meet with some sort of resistance somewhere around the 57,600 odd levels. But again, it's more of a buying on dips till we see a trend change on the short-term charts.
All right. Amar, anything specific in terms of your picks that you might want to recommend?
Yeah, so there are two picks I'd like to talk about. First is ICICI Pru. So here we are seeing that the stock has consolidated and has taken off, because earlier, if I look at so somewhere in the month of May, the stock had made a high of 675, 676. From there, it had corrected all the way towards 620. Again, today, we've seen some very sharp move in the stock. The stock is up by almost to 2.5% today. And also, what's interesting is that volumes have been significantly higher over the last few trading sessions, both on the delivery side and the traded volume. So that really shows that there's definitely interest in this particular stock. And also, what we are seeing on the intermediate term charts is that there's very strong momentum that's building up. So sustaining about 675, 680 levels, the stock has a potential to rally, witness a significant rally towards 750, 757 levels. So that's what this is one stock one can look at, and the stop loss in this case would be 633. And the second stock to look at is from the pharma space, and that's Natco Pharma. Now, this is one stock which witnessed significant correction from almost, it witnessed more than 50% correction. Now it's pulled back and it's inching higher. Currently, it's trading around 1017, 1018 levels. So buying at the current levels, one can look at an opportunity for an upside target of 1123 and a stop loss of 947. So this is a second stock one can look at.
Irrespective of the developments, announcements and news flows coming in on tariff front, the pharma sector was performing in the trade today. Two stocks coming in, one Natco Pharma with a target price of 1123 and the second one ICICI Prudential with a target price of 750. Amardev Singh ji, thank you so much for joining with us, talking to us both stock specific as well as your approach on the indices. Thanks. Moving ahead, let's now understand what are those breakout stocks on Shrishti's radar. Shrishti, which are the scripts which you're focusing on? Good afternoon.
Good afternoon. So we have got two counters as the breakout stocks. Firstly, let's have a look at HUL, because all the FMCG majors, and especially from the likes of staples, they have been doing very well. The news flow is indeed the Q1 update so far that is giving a boost to the stock prices as well. But take a look at the chart as well, because for HUL, yes, it has been one of those key underperformers, and especially the Q4 earnings hasn't been that great as well. But now a bit of a rebound is what we are seeing on the stock as well, because now the stock is trying to move past its resistance of 2400 levels for itself. And not just that, if you look at the stock on the technical front, it is now seen to be trading above its key moving averages. In today's trading session, once again managed to cross past its previous day high as well. And on the derivative side, we have seen a long build-up addition as well. So these are the factors that we have chosen this stock as one of those breakout candidates. But the next stock, that too is also one of the breakout stocks, and that is Concor, because after so many days, I guess, we are talking about this stock. But what was interesting to see is a breakout of a falling trend line. And not just that, the stock managed to break past its 20-day moving average, which generally act as a resistance for itself. And in today's trading session, we have seen a strong move coming in and a strong green candle rather forming for Concor, and hence we have chosen this stock as the second breakout stock for today. So these are the two stocks. Back to you.
Thank you so much, Srishti, for all those information and your picks on the chart. But then let's move on. And Harsha Upadhyay, CIO Equity, Kotak AMC prefers domestic-oriented sectors like financial, cements and capital goods, oil and gas, telecom. And he also is overweight on chemicals, as he believes that India has a competitive advantage. Listen.
We still are tilted more towards domestic businesses. That's where there is a lot of resilience. At least there is some bit of earnings growth, some bit of volume growth. There are no headwinds like what's going to happen on tariffs, etc. So that's the pocket where we have been overweight at this point of time. It would be different in different funds, but generally financials, cement, capital goods in some portfolios, oil and gas in some portfolios. We also have exposure to telecom, power, etc., which are all domestic oriented and have very little to do with overall tariffs or some of the issues that are there in the global market in terms of growth. We do have overweight on one of the export-oriented sectors, which is chemicals, where we believe that India continues to have a relative competitive advantage over some of the others, which are likely to have higher tariffs than us.
Okay, so that was Harsha Upadhyay explaining how is India placed in comparison to the global peers. Moving ahead, metal counters under slight pressure after Trump did announce 50% tariff on all copper imports expected to be implemented by end of the month. Let's understand this more in detail. Ashesha joins in with all the details, implications of the tariffs on the Indian industry. Ashesha, over to you.
Just to give you a brief background, it was in February this year when US President Donald Trump had initiated a probe into copper imports into US. Now he has gone ahead and proposed this 50% tariff on copper. Remember, this is just a proposal for now. Final order could be signed over the next few days, and this is likely to have an impact and could impact demand supply dynamics of copper market globally. Now, as far as direct implication is concerned, tariffs are likely to increase, which means prices of copper in the US are likely to rise going forward. But for countries like India, perhaps we will not see any kind of direct impact. One, because we don't export copper as much. But of course, we will see some kind of impact on copper prices. This is because all that copper which was going into United States will now probably go into several other countries. A supply of copper in several countries which import copper is likely to rise going forward, which could exert pressure on prices. So perhaps for Indian copper manufacturers, the likes of Hindalco, Vedanta and Hindustan Copper, copper prices could be under pressure, and that could be a big of a negative. But remember, as far as consuming industries are concerned, the likes of automobile companies and several data centers, wires and cables businesses, they have copper as their major raw material. So if at all prices were to fall going forward, this could be a positive for all of these consuming sectors. But remember, all this was mostly priced in, and this is because as I mentioned, the probe had begun in February this year, and Street was already expecting a tariffs on copper. In fact, over the last few days, we saw a lot of inventory being transferred from London Metal Exchange to the US before the imposition of tariff, because of which the Street was largely penciling in and perhaps expecting this kind of tariff to come in on copper. So yes, no major surprises as such, but sentimentally positive for consuming sectors, because prices in countries like India could fall on account of this.
Right, Ashesha, thank you so much for all those updates. But then Trump is making efforts to bring in more money from higher tariffs into the economy, but it could instead hurt American consumers, says Peter McQuarrie. Listen
in. Increasing these tariffs to from a revenue standpoint. So he's got one agenda, and that is to raise revenue for America. And that's the lens that he looks through, and Howard Lutnick. As far as the suppliers, this is going to have some impact, naturally, one, to the consumer, and secondly, whether they take on board those additional costs as far as tariffs, and they absorb them. And that's something that I think any CEO or CFO has got to work through at the moment. Are they going to be competitive if they don't add those to their product, or if they do add it to the product? But the overall theme is going to be, I think, higher prices. And that's going to be, I want to see how the LME trades over the next probably 2 sessions, currently at about 97, 9,800 a metric ton, whether it's going to crack, 10.5 or 11,000. So we've just got to work through this and see the impact it's going to be, I think, appreciated from the LME and naturally on the COMEX futures.
So that's all our take on the copper as well as metal sector post the tariff announcements over the same. But now let's take a look at what are the stocks and news which are doing the rounds on the exchanges during the entire session. Rabinder is joining in with all those details. Rabinder, over to you.
Well, as on back of weak Q1 business update, Union Bank of India is in focus, where bank has announced their Q1 FY26 business update, and the bank's total global deposit saw an uptick of more than 3.5% on a year-on-year basis, but it was declined 2.5% on a sequential basis, and domestic deposit was also down by more than 2.5% on a sequential basis. Apart from this, Dixon Technology is also in focus, where Lightnanium is incorporated as a joint venture of the company and Signify, and will carry the business as an original equipment manufacturer manufacturer OEM of lightning product and accessory, and the cost of the acquisition will be 2.55 crore. Apart from this, JP Morgan has come out with the note on Dixon Technologies, and they have initiated a coverage with overweight rating and target price of rupees 17,700. Apart from this, on back of brokerage note, delivery is also in focus, where Motilal Oswal has come out with their note, and they have initiated a coverage with buy rating and target price of rupees 480. They say that the deliveries focus on strategic acquisition and providing integrated solution will further strengthen its growing prospectus. Moving to next, Phoenix Mills is also in focus on back of the brokerage note, where Nomura has come out with the note, and they have initiated a coverage with reduced rating and target price of rupees 1400. And lastly, consumer staple stocks were in focus, where Jefferies has come out with a note on the consumer staple. They say that the Varun Beverages, Hindustan Unilever, Asian Paint appears as the best contra 12-month ideas, and for Varun Beverages they have given a buy rating with target price of rupees 560, and for Asian Paint they have given an underperform rating with revised target price of rupees 2,830, and for the Hindustan Unilever they have given a buy rating with target price rupees 2,950.
Well, thanks for all of those stocks and news, Rabinder. Moving ahead, Amphi data for the month of June has trickled in. SIP inflows touch an all-time high of 27,269 crore. My colleague Sharad is here with all the highlights of the same. Sharad, what does the Amphi data indicate?
Well, a very strong Amphi numbers coming in for the month of June, and the first time itself the number has gone past the 27,000 crore mark, indicating a strong retail participation in the markets despite the volatility we have seen over the last 3 to 4 odd months. Now, interestingly, the equity inflow that has come in at 2-month high levels as well. Last month it was below 20,000 crore mark, and now it's back to the average of almost 24,000 to 28,000 crores, which we have seen over the last 6 months. Interestingly, the inflows, be it the large cap, be it the mid cap, be it the small cap, all are roaring in. Between 30 to 35% month-on-month jump has also been there. Except ELS scheme, all the equity schemes have shown inflows, and this is the 52nd straight month where we are seeing equity inflows coming in strong. Also, apart from this, if you look at it, the debt numbers have also been decent, but the most important number to look out is the SIP number. It's at a record level of 27,000 crore odd rupees. So that's a very strong indication coming in the markets, especially regarding the AMC stocks as well as the mutual fund data, and overall the sentiment is back.
So that's the strong Amphi data, and in particular the SIP inflows. Moving ahead, what are those economic indicative actions, cues and triggers to watch out for tomorrow? Let's take a look. Snehi is here with all the details. Snehi, over to you.
Well, yes, lots of cues to watch out for, and the first and the most important one is going to be that we are going to be kickstarting the Q1 FY26 earnings season back home. Along with that is of course going to be the Nifty expiry as well. But while we're talking about earnings season, from the Nifty 50 pack, you have TCS, IT Bellwether, always the first one from the Nifty 50 group of companies to kickstart the earnings. So TCS numbers will be coming post-market hours. From the broader end of the market, you have Ireda that will be coming out with its Q1 numbers as well. Shifting focus to some global news and updates. From the US, we're expecting to see initial jobless claims data, and from Japan, the PPI data will be out. So watch out for that. Once again, shifting focus back home, let's talk about some corporate action and board meetings expected tomorrow. Dr. Reddy's will be a stock in focus because it's going to be trading ex-dividend, and also a whole host of stocks, the likes of Canfin Homes, IDFC First Bank, Mahindra Logistics, Shriram Finance, Sobha, UPL. Tomorrow is going to be the last day to purchase all of these stocks if you wish to be eligible for their dividend record date. So watch out for some buying action in these stocks as well. AGMs, you'll have Vedanta and Kalpataru projects that will be holding their annual general meeting, so watch out for both of these counters. And well, in terms of some overall events from globally, we have some commentary coming in from the Fed, wherein San Francisco Fed President Mary Daly is all set to speak, so watch out for all of these cues. And well, it's going to be an interesting session, given that we are going to be kickstarting the Q1 FY26 earnings.
Absolutely. Thank you so much for all of those cues and triggers, Snehi. With that, we officially kickstart the earnings season from tomorrow. The IT major TCS is going to post the results. And yes, ahead of it, a lot of results are all about cash, FNO and Nifty, which will be on our focus radar. With that, it's a wrap on this edition of Your Trades. I'm going to take your leave, but there's a lot on the other side of the break. So you stay tuned.